What's going on, guys? Hope everyone is having an amazing weekend. And I just want to bring this back testing video to you guys because I know that being able to back test within the market, a lot of people, use back testing to, perfect the strategy, et cetera, et cetera. My main thing that I feel back testing does is that it develops the confidence needed within the trading week to dominate the markets. That's honestly, my opinion on back testing, and that's my personal experience. When I back test, there's something that I do that, when most people back test, what do? And they come on to the platform and they start to hide, like let's say they're starting off here and they don't know what's going to happen. And that's a good way to practice your strategy. But me personally, when I back test within the market, I'm just looking to see when my strategy was activated, what happened. And the more and more you see that when your strategy, the confirmations came together and that trade activated, when you see more and more that every time you had a winning trade, 8 out of 10 trades, right? Most of the time you were winning the trade, that develops a confidence within the market. That develops a mindset of, I know that my strategy wins most of the time. So guys, if there's any big takeaway from, this back testing video, is going to be not so much to go and back test and hide the candles and see what would have happened. More than that, I want you to just go exactly to where your trade activated. Let's see if you're doing the cross off of the green. Let's say this is a green box and I'm doing my cross and I'm looking for the next Hikanashi candle, right? That is a flat bottom. So here it is right here. And look how this trade went all the way in profits. Stop loss would have been at the previous lows. And the more and more that you do that, let's look at another example, right? Here was the red box. It came off the red box. Here was the cross. Here was the entry. Stop loss at the previous high. Look how it went all the way down here, right? That was your entry right here. Price is down here. So I want you guys to locate where your entries are. Locate where your entries are time and time again so that you can see how your trade performed, how your setup performed when all of your confirmations aligned and your trade activated. Okay? So that's my biggest takeaway, that I could give you guys to take away is to not just, hide the candles and see what's going to happen. Just go see what happened. That's how I personally back test with colors. It was different when I was back testing on TradingView, with other strategies. When you're back testing other strategies, you have all these steps, all these confirmations, you're more or less, you're really back testing your knowledge on, do you remember all the steps? That's really what you're back testing when you're on TradingView and you're back testing, let's say, a DeLorean, or you're back testing just regular price action without any, AI. So you're back testing your knowledge. That's really what you're doing. But when it comes to colors and it comes to a few of our other strategies, what are you really back testing if the AI tells you when to enter and what to do? Really, what you're back testing is you're building your confidence of that setup. So let's get into the back testing. I'm excited. I know that you guys are going to absolutely love this. And let's get it. So we're going to start right here with and we're just going to do a few examples. We're not going to go crazy here, guys. If you want more examples of that setup, remember, this isn't a strategy training. This is a back testing. So if you want to learn that strategy, then you need to go watch the videos of that strategy. This is more so that you understand how you can go back into the market and develop that confidence that you need for the following trading week. All right. So let's go ahead and draw here this box here. Let's say this was a green box. Okay. Let's say this was a green box. Okay. And you're coming out of the green box and you have the cross, right? Let's double click the chart to open just the chart. If you double click again, you go back to normal. Double click here, you have that one. Double click here, you have that one. Double click here. So just a heads up, right? I personally, when it comes to the strategies that I'm showing you guys, especially the break of structure, I just use the chart. So double click here and I have a nice clean chart. So let's look right here. Was the cross. Then you have your flat bottom. That's the entry. Stop loss at the previous lows. Okay, so it looked something like can't really see it there. Here's the cross, flat bottom, stop loss here. TP would have been next resistance. You could have done the top of the resistance for a 1 to 6, right? But it did go for a 2-to-1 risk to reward, right? Just right there, smacked right there for a 2-to-1 risk to reward. That was a 97 pip run on a simple cross off of the structure, right? So you have the structure, came off of the structure, the cross. Let's look at the opposite. We have it right here. Here's the cross. Now, where's your next flat bottom? Right here. Because here's the cross. You can't count that one. So it would have been right here. Your stop loss could have been these wicks here that the market stopped. That's the previous high. That's the lower high, right? Or you could target just over. You know that if it crosses over these lines, then you want to get out of the trade. So you could target just over the lines, right? You don't want to target all the way up here. So personally, I would have targeted just these wicks here, this rejection. And there was no boxes to target. So you just want to go for a 2-to-1, right? Or look left for structure. You could have gone for a 3-to-1. And if you trailed your stop, you could have gone for almost a 5-to-1, a 4-to-1 risk to reward. And if it would have came back, I mean, that's a little bit more advanced, but here's the retest of the EMA for another push. But based off the two-step setup, that's how simple it is, guys. Very, very simple. But Alex, what if it comes off of a box and there's no cross? Well, then that's not your setup. Sometimes you guys ask questions that, simply put, it's not your setup. This is not crossing. You need to look for the pair. Look at all these. Look when I scroll to the side. Look at all these currency pairs that you could go through. You don't have to get stuck on one pair that crossed May 16th and hasn't crossed again, you know? So stick to the ones that have your setup. Let's look at one more example. Here's the structure, right? Structure, the cross, the flat bottom, and it went for probably 20, 30 pips from here to here. Let's look at it again. Here's the structure. the cross, flat bottom, stop loss at the previous low, and look how much it went for. Look at this. Entry was down here and it went all the way up here. So guys, two-step setup, you know, it's the cross, right? And the Hikinashi candle with the flat bottom. Okay, and reverse, if you're selling, it's the flat top. So let's get into the really quickly. And my point of showing you guys, like, look how many times it crossed and it won, right? Look, I mean, how many pairs do you have to see that it came out of structure? Let's say there was a red box here, came out of structure, crossed, and it just went for tons of pips. How many times do you have to see that for you to trust the trade when you're in the trade? Here it is again, structure, crosses, right? Hikinashi candle, flat top, took it all the way down to the green box. How many times do you have to see the same thing so that you can trust your trade? Now, three-step setup. It's not going to work. The three-step setup, I would need these old candles. Let's see. You need the swing arrows. So let me go back on CAD-JPY. Let's see, where is the swing arrow? Okay, here's the swing arrow. But since ECs are gone, we can't. Okay, but let's just say, just give you an example. Three-step setup is box swing plus an EC level or a BM and SM. So let's just say you got your swing and your EC was back here. So you already have a level. That's this black line that I'm putting. You already have a level. So now you have your swing, your EC. Once the EC comes back and retests, right, the market comes back to that EC level, that's your entry. Look how it took off. Let's look at another example. Okay, let's look at this example. Here's your swing. Let's say your EC was right here. This was your EC. So you got your swing, your EC. Now when the market came back and retested that EC, so you got it here, the market came back and smacked it again here. That was your entry. And look how it went all the way up. How many times do you have to see the same thing work in your favor for you to trust the trade when you're in the market, not just back testing? Here's your swing right here. If you don't see it, it's under this triangle. Let's say that your EC was here. EC gets retested. That's your entry. Look at this beautiful push. How many times do you have to see the same thing happen again and again for you to trust your setup? 400 pips. So guys, that's the three-step setup. Again, this is not a strategy training. This is a backtest training. So this is so that you develop the confidence you need within the market. So now we're going to go over the break of structure. What does the break of structure, what are the confirmations for the break of structure? It's literally a one-step setup. This is a one-step setup. You have red box, green box. When you could put a pending order because you might not be able to catch it. So if you see that the market is uptrending, or if it's in consolidation, whatever it is, it doesn't have to be uptrending, downtrending. You just see this green box and you see this red box. And there's only two things that can happen. The market is moving, and the market can either go down and break under, or the market can go up and break over. There's only two things that the market can do. So if we know that there's only two things that the market can do, what can we do? Well, we can look to capitalize on the breakout, the break of structure. So if there's a red box here, I put a pending order here, which is a buy stop loss under the box. So let's see how many times this worked out. It broke structure right here. Some of you say this is a fake out, I'm not going to get in. Well, guess what? My pending order is right here. So I'm in the trade at this wick. Some of you are in the trade at this wick 1, 2, 3 hours, 4 hours in the negative, and you close your trade. But my stop loss is here. Entry, stop loss. Price never came back to stop loss. Was negative for 1, 2, 3, 4 hours. And then finally pushed for over 320 pips. Let's look at it again. Again, I continue to say the same thing. How many times does this have to happen? How many times do you have to see this happen in order for you to trust the trade? So here's the red box. Price breaks out the red box. That's my entry and goes all the way up. Now, let's look at what happened. Will you trust your trade? So let's see. Entry is here. Stop loss here. So if I entered the market here, then that means that this wick took me in. That means for 2 hours, this candle and this candle, I was negative for 2 hours. Are you going to hold that? Some of you have to realize what type of trade you're taking. Some of you take a lot of my setups are 1 hour, and within 30 minutes, you think the setup is done. You think because you push 10, 15, 20, 30 pips, the setup is done. If you're taking an hour chart, you have long trades. This trade was negative for 3 hours and then pushed just under 300 pips. So it was negative for 3 hours, but I was in profits for 6 days. No, let's do it right here. For 4 days. So some of you got out of the trade here. Meanwhile, for the next 4 days, we collected tons of pips. So when I say that so that you understand what market are you trading. Are you trading 5 minute? Are you trading 1 hour? Is it a long-term setup? Is it a short-term setup? If you are here, you should already know colors swing. This is a swing trade. You shouldn't be looking at it every 30 minutes if it's a swing trade. You look at it just to see what's going on every few hours. But you know that you're holding it for days at a time. So know what market you're trading. All right, so let's look at another one. And look at this one here. Same exact thing. This was the entry. This was the stop loss, right? Now look how it came into entry, pushed about 40 pips the first hour. It pushed about 40 pips, and then it went negative 40 pips, and I'm sure you probably got out of the trade. But guess what? Stop loss is right here. Entry is right here. I'm not worried about that. Trust your trade because you missed out on 180 pips, right? How many of you would have been out of the trade already because, you know, you're worried about it's going to reverse? Well, stop loss is down here. That's my exit if it reverses. I shouldn't be worried about it. I already set my risk to reward. So guys, there is the backtesting training. I really want you guys, remember, this is not a strategy training. If you want to learn the strategy, go into the videos, you know, go check out the colors, all of the strategies, you learn the one you want, right? But my main reason of doing this is so that you can understand that back testing and watching your strategy activate and seeing what happened every single time those confirmations aligned and activated your setup, the more and more you see that your setup is a profitable setup, the more and more you will have that confidence that you need within the markets to dominate. So, guys, I hope you have an amazing night or an amazing day wherever you're tuning in from. And let's crush the markets this week.